All right, everybody, this is Christian from Tropica Trade Group with your weekend video on some of the indices some finer points in the indices to look at. Also going to look at sectors, some international areas, which, as always, don't really get as much attention as I think they should, but there's some opportunities in some of them. So we're going to go over that, and then we're going to go over last week's option activity as well, and where we saw some aggressive call activity. So let's start with the indices. I don't spend a lot of time on these because I think there's other interesting or better things that are going on in the market. But it's always kind of good to kind of start here and then drill in, kind of like a top-down approach. So S&P, in an uptrend, there's really not much to overanalyze here. We are a little bit overbought. I would say that's one of the biggest issues for me, is just the fact that normally we just don't stay overbought for that long. I did take a look at in the newsletter, just kind of broke down by the S&P sector GICs, and pretty much, which is really unusual, is all of the, and I could talk about this just briefly in the newsletter. It's really unusual to see all of the sectors above the 50, the 100, and the 200-day moving average, or at least 90% of them. The only one that's under the moving averages is telecom. That's the only one that's underneath the 200-day. But also, for the better part of the year, we've had two or three that have been kind of underneath the 50-day. Well, the last couple of weeks, we've basically have a full participation that's going on in sectors. When you strip out telecom, which is only 2% of the S&P and more of a defensive sector, but everything else, it's kind of been a rotation back and forth week to week, but really strong and yeah, full participation. So that's the only other thing you can kind of say if you want to be a little bit of a contrarian. Also, the fund flows every week I'm sorry, not every week, for the last 2 weeks have been running really hot. Normally, it's about $2 to $3 billion that are added to U.S. indices or U.S. funds, equity ETFs, and it's been 2 weeks ago it was $10.5 billion, and last week it was $14 billion. So that's way above the normal. So again, if you're a contrarian, you have to ask yourself, how much longer can this type of money be added? Again, the average is about 2 to 3 billion, and that's what the average has been for all of 2017. So we are running really hot. The sectors that for the second week in a row, financials led. I think it was about 8 weeks where tech put together. Sorry, that's wrong. It was 5 weeks where tech consecutively was the highest sector that saw inflows. But the last 2 weeks it's been financials, which you probably are aware of that because you've seen the price action in the banks and the financials. Consumer staples also saw uh, a big inflow last week. Consumer discretionary materials, tech also saw some inflows. Interesting. It looked like there was a little bit of one of the rotations that just was seen was a rotation out of industrials and I think into consumer staples. I would not get too worried about that. We've seen that in the past where it was money going into industrials and money coming out of consumer staples. It doesn't have that much of a loss of a lasting impact there. So I wouldn't get carried away with that one. And then healthcare saw some outflows mostly in the beginning of last week. So that's how the sector flows lined up. But really, what was about 50% or a little bit more, 50% of that headline number, the 14.1, is just S&P funds. IVV and SPY took in about $8 billion of the 14 billion. So again, running really hot, and I think you just want to be cognizant of that, and knowing that that's what's been driving up the market is just a lot of money going in there. So that's overbought. What really kind of gave us some clues last week, and I'll touch upon this. These are the types of things that we go over in the trading room, but the VIX was up just a touch last week and really sold off towards the end of the week. It only hit about 11 and a half. Last week we had this one crazy bar that happened, but really what I've been focused on, because again, you have to be focused on the things that are driving the market, was the VXN. Now the VXN is the VIX for the Qs. I talked about this in last week's video, and look at what happened here in the last week. What I was really watching is this 16, I think it was actually the 16 and a half level was the first thing. Again, the VIX for the Qs was heightened and much more higher than S&P. So it kind of hung in there for the beginning of the week, and then if you notice, on Wednesdays really started to be where it turned down. It turned down, ducked under 17. It had one quick bout with trying to retake it, but you could look basically from Wednesday on, the VIX for the Qs was in a downtrend, and that gave us a great signal in terms of whether or not the volatility was staying within the market or if it was abating, and it really got out of the way pretty quick. And you could see what happened on Thursday and Friday. 16 and a half and 16 was the level that I was talking about in a couple of the midweek videos, and sure enough, Thursday and Friday this thing really went lower and went lower quick. So 14 is where we are now, and again, that's a good sign. What that kind of means, if you're not watching these and if you're not in the trading room, which I hope you would try it, because these are the things that really give traders hints into what type of a market is, and it just returns. It basically means that we're returning back to a stock pickers market, right? When major volatility comes out, things are not all moving the same, and you can start to really take a look at individual names rather than just watching the indices. So again, it migrates from just looking at the overall indices when everything's moving together to a stock pickers market, and that gave us a great signal to kind of get long some names as well as aggressive call activity. So again, we don't just look at aggressive call activity. That's definitely a piece of the puzzle that we like to watch for momentum, but there's other things that have to tell you. There's other things that there are to look at, because if there's big selling going on, you're not really going to see that in the call activity, right? If you're just watching call activity and they're dumping things in cash, where there's a lot of outflows in certain things. I use an example of healthcare last week. We did see some call buying in some biotech ETFs about a week and a half ago, but one of the reasons why biotech was still going down is because it was being sold in cash. The XLV had a big outflow, as did IBB. So which is the other biotech ETF. So you have to kind of, I look at more than one things. We're not just a one-trick pony where we're just looking at that. I mean, you could look at that option activity all day long, but if it's things are being sold in cash, it's not going to make much of a difference. So that this analysis kind of foots to that. When you see that volatility come out, then it's a better time to look at option flow, because again, it becomes a stock pickers market. All right, so a little bit of a lengthy explanation there, but it really applies. It really does. All right, so let me just before we do hit the option activity, one thing my chart of the week is the Baltic Dry Index. This was mentioned by Stephanie Link last week on Twitter, and this is something that I look at a lot, the Baltic Dry Index. But don't watch it every day. You can't trade this. It's just a good indicator of how global growth. If the Dry Index is trending down, that means global activity is trending down, and it's trending up right now. So that's a pretty good indicator, I think, for the overall global economy. All right, so we talked about fund flows, again running pretty hot. So with that, if that's the case, I want to start looking at some different things. Energy, we saw a big call buyer on Friday. This was the March 72.5 strikes. We don't normally see orders being swept in sector ETFs, but we saw that a couple times on Friday, which is the March 72.5 calls in XLE. Let's face it, XLE energy is above this white line here on the charts, above the 200-day moving average. So it is now away from that downtrend. It is broken out. This was a big downward channel. Out of that channel, and good to see call buying in that group. Keep in mind that Exxon and Chevron are almost 30% of the XLE ETF. Another area to watch is the banks. Just mentioned above that they've been seeing the most inflows of any sector, not just carry, but mainly XLF. But just looking at the charts, we did see some call buying in carry towards the end of last week. And really, watching this, this is the big breakout that we saw in November after the election. Big long base, and trying to push higher here. So I think as long as it remains, if it gets above this dotted line, what is resistance will become support, and I think you want to try to play the breakout. I talked about biotech. This has certainly been tricky for biotech the last couple months. We had the nice move higher, and then that was it. And then we just kind of were making lower lows and lower highs for the last couple months. Really a tricky candle here. About a week ago, we got above the 50-day moving average intraday, and we stalled out. So I think you really want to be aware. We had two nice days last week at the end of the week of gains in biotech after putting in this hammer. Watch for continuation. Let's see if it can hold the 50-day moving average. That's the purple line on my charts, and that would be a great signal to get long this group. There is the big ASH conference that's taking place right now. Bots. This has been one of the best areas of the year in terms of performance. Either robo or bots you could basically use here. I went long bots on Friday, the Global Robotics and Artificial Intelligence ETF. We got a rare dip in this. Now, again, it got a little bit ahead of itself. You can see it got overbought. It's been overbought a few times this year. But you got your defined support. Now, it's up to you. It's up to me to manage it. I'm long, and I got long versus the 50-day moving average. If it dips below the 50-day moving average, I want to get out. And again, that's where, for talking about all this, as we go through the analysis of these charts and the analysis and aggressive call activity, what's paramount here is how you manage your positions, not just the activity that you see on the tape, but also how you're managing things when things don't go wrong. So that's one of the most important things here. And the 50-day moving average, if it breaks there, I'm not going to sit in the trade. I'm going to unwind it. And again, that's the best thing I could do. Similarly here, I also got long China, which has also been a very strong area of the market this year. Big dip in a lot of the emerging market ETFs. So we could also look at EEM, which did see some call action last week. But I got long on the hold of the 100-day moving average, and then we saw some follow-through activity. It still has to keep going, which I'm going to go over a couple of charts where we're still going to need just to see more a sustained bounce, not just a couple day bounce, but it needs to reclaim the 50-day moving average, which is now overhead resistance. Japan, another area to look at, and I'm watching for an MACD crossover. Had this real nice break about a couple months ago, and it's kind of just been flirting with this. Maintaining that breakout for the time being. So it certainly has done enough digestion. It's held here, and we'll see if it could get back above the top of value here. I would again watch for an MACD crossover for confirmation. India, another area that I'm watching that's been kind of moving sideways. It broke the 200-day moving average back in October, reclaimed it, but it's kind of been doing this back and forth action here. Again, just like with EWJ. Watch in the EPI, the India ETF, watch for an MACD crossover for confirmation. If that happens right around the 52-week high, I think I would be looking to play the breakout here. No position on that for me. Okay, so here's where it gets interesting. Going back to the U.S., which I know a lot of retail investors are more concerned with, is technology and what happened in technology. So this particular ETF that I've been watching for the better part of this year, which is the North American Tech and Software ETF. This is where we've been seeing just throughout the year a lot of activity on the call side. Not so much, this is not the FANG stocks. This is tech, but it's more Adobe, Microsoft, Salesforce, ATBI, Intuit, EA. There's a few other names in here. If you look, we could actually bring up Bloomberg just to clarify. And you could see that other names that are in here is Autodesk, Red Hat, ServiceNow. Again, these have been really, really your tech leaders and your, I would say not second tier, but just a little bit off the radar of what everybody looks at, which is the FANG stocks. But really strong performance. They also found support at that 100-day moving average. And they reclaimed the 200. However, they reclaimed the 50-day moving average. So bounce off the 100, reclaim the 50, but looked a little bit weak on Friday after opening higher. So just a couple names that we've seen some nice call activity in. Salesforce. Salesforce, which I'm long. I got long, after the second or third time that we saw call activity in it, and this was a big move down the one day, and I think I got long right in here, and so real nice bounce, and it's above the again, this is Salesforce, this is not the IGV, but it started higher on Friday and ended lower, so I don't think that's the end of the world, but I think you do want to be cognizant of this 102.32 level. So I've been taking profits. So that's the other thing is, when you get these bounces, I think it's best not to be greedy, especially with your option positions. I think I've already taken two targets, so I think I'm out of 50% of my position in Salesforce, and now I can play with the winner here. And if it fails here at 102.30, at least I've locked in a good amount of profits. Same thing with the semis. Let me just, before I go to the semis, just another chart is Adobe. Also had a nice bounce off the 50-day moving average, but you could see started the day higher and closed lower. So not the best that's really not what you want to see. But again, it's just one day, so keep an eye on your support and your resistance levels. Here, the support level is going to look a little bit different. It's the 50-day moving average. But again, we'll know pretty soon, I think next week, if the bounce is going to continue in tech land. The same thing with the semiconductors, which got hit really hard from the 52-week highs and being overbought there for a couple weeks. Also, kind of an ugly looking candle on Friday. A nice bounce Wednesday. Actually, not as nice of a bounce in the overall semiconductor ETF than a couple different names. Micron was one name to focus on in aggressive option activity, but again, it was a little bit weak. I think still stronger, and really, this is where we've seen a lot of dip buying after this move down. There's been buyers. It took them a little while, but they did show up a couple days repetitively in Micron last week. So again, your support here is 42.53. Again, very easy. The value areas are lining up very nicely with the moving average. So 42.53 is your support that you want to write down and you want to be cognizant of. If not, you're going to have a little bit of a mess. Now again, keep in mind, I'm not really going over too many of the FANG charts as well. I think Amazon looks good, staying above the short-term moving averages. Google's another one where we saw a really nice call buyer, not last Friday, but I believe it was the Friday before. I may have my day off by a day, but this was a leap buyer. I think this looks really nice, and this is what you want to see. Here's your sell signal when you have the yellow line, short-term moving average, which is the 5. Crossing below the blue is a sell signal, right? But so what you want to see very quickly is it reverse and the yellow line cross back above the blue. There's your buy signal. Also watch for an MACD crossover here. That would be really nice for Google. So I've got my eye on that one. But just keep in mind, if I go all the way to the tech ETF, the last time that we really saw this weakness in tech, we got a little bit of a bounce. This was the sell-off back in June. And we did get a little bit of a bounce, but we got that red bar here, and then we got back down here. So it just took a little while. Now, of course, we ended up higher, but so the reason why I bring this up and what we saw back in June and July of last year is sometimes it works its way through. Sometimes we don't get that reclaim back to 52-week highs right away. Sometimes it could take a little while. So how could that apply to you? Or make sure that you have, if you're buying the dip in some of these areas and you're doing it through options, make sure that you're giving yourself plenty of time. And I'm a big advocate of using longer term, not just front month option positions, because sometimes you may be right, but if your timing is wrong, if your trade is too short term and you have a sustained dip here before we go back and do this, your P&L is going to suffer because you don't have the right duration trade on in your option. So again, be mindful of this. It kind of looks like a couple days, just like we saw here, in a red candle. Again, doesn't necessarily mean we're going to turn and go back down, but be careful of your support. And XLK, that's 62.84. I think you have to be mindful of that, because again, if something like this happens, it's going to cost you some P&L. So we don't know yet. I don't have a crystal ball. I can't tell you what's going to happen there, but you want to be able, but you want to be respecting these areas where they give way if that happens. All right, so that's a good couple minute analysis on technology, a few different charts in that space. A couple of names that I have my eye on for next week. Gilead, I like the chart. So so again, going back to what in the beginning of the video, I talked about how there's been just a ton of inflows into equity ETFs, and I think at this point, looking for things a little bit off the radar, things that I don't want to say are not common, but just some different names than what everybody has their eyes on. If we get a little bit of a pullback in the S&P, maybe some of these names that are just a little bit off the people's radar might hold in a little bit better. MAC, this is a name that we've seen a lot of call buying in the previous months. We saw another call buyer come in on Friday. I have to check open interest to double check. But basically the chart here, this is a name that it's a REIT, and it's kind of similar to Simon Property Group. It's a mall operator, but different properties. So one of the things to realize is the move that's been happening in retail. So if retail starts to do very well, as XRT is now way above the 200-day moving average, this is the equally weighted ETF for retail. Notice this thing has gotten out of this weakness area and has bounced quite nicely. It's been one of the best perform. It was actually the best performer last week in terms of sectors. So if this group does well, you would think that the retail and the shopping centers, those REITs are also going to do well. So I think that could be why we've been seeing some repeat call activity in this particular name. MAC, that's just my hunch. It has in the charts a nice golden cross where the 50-day crossed over the 200, and we have a little bit of digestion here for a while. So watch for a breakout above basically 65.75 in this one. And then, really, and I even wrote down here a horrible looking chart. But keep in mind, next week is quadruple witching on Friday. And a lot of times people are playing, there's a trade out there. It's like the end of the year trade where names that have made a 52-week low or close to it sometimes bounce pretty hard. I think index rebalancing has to do a lot with that as well. Papa John's, so a really ugly looking downtrend that this name has been in, but it's got support. 56.12 is your support there, or $56. And the reason why I have this one on the radar is because we saw call buying in it. Shack, another one. Shack is now in an uptrend. This is probably one of my favorite charts out there. This is all the way since the name had the IPO and it ran up to $90. But look at the base that this has been in here for over a year. So over a 1 year base, and now trying to break out from it. So really, really nice. Trinity, this is a name that's seen repeat call activity from a couple weeks ago to last week, and it's another rail name. And if you look at, we saw call activity in UNP, CSX, which have been basically on fire. This one I think could be another one to catch here. Now it has been up nicely, but if you kind of look at where this thing has come from, could be shooting for this 44 level if it could break out of this zone. Intel, we saw big call buyer in this one on Friday. Really easy technical setup here. It's right. The price has been just sitting on the 50-day moving average basically all of last week. It needs to bounce from there. If it fails, you also are contending with this earnings gap. So if it breaks the 50, I would say time to trim it or get out of it. But I think it's worthy of checking out to see if it could bounce on this 50-day moving average, that purple line. Alibaba, another name that we saw some big call buying last week, retook the 100-day moving average last week, and it needs to reclaim the 50. Another name that I got long, very close to the lows. I've already taken some profits off, so I've secured myself from making sure that I've got this will be a profitable trade. If it ducks back down and it can't get above overhead resistance of the 50-day, could be a time to abandon it, but not yet. And again, taking profits, great thing to do here. Lumber liquidators, another name that we saw call activity in, riding that 200-day moving average, started to get a little bit of separation, needs to do a little bit more. I've taken one target in this lumber liquidators trade, so I'm out of about 25% of that ETF. So that's it in terms of charts. I could show you one other chart that we saw call activity, which I really like, which is one of the European ETFs, excuse me, one of the European banks, Credit Suisse. You have to kind of look at a longer term chart here, maybe a 3-year chart, and you could see the base, just like Shack, right? Long base of about a year and starting to get a little bit of distance above these moving averages here. And I'm long Credit Suisse for a swing trade. I've taken a little bit of it off, but still looking to kind of ride this and be patient with it as it works its way up. So just a summary for last week's option activity. So, only went over a couple of the charts because, all day long we're reading the tape, and I don't tweet out every single time somebody buys, a little bit of aggressive calls. It's just too much, right? I mean, you can't look at 50 names, and you certainly can't own and manage 50 names from, aggressive call activity. So even this has a lot more names that you probably want to be focused on. But it's kind of just good to write them down and have a watch list in case we see, so that you could recognize the repeat activity. Because really, those I think are some of the best signals when somebody comes after a name over and over and over. So that's why I have a watch list here from last week, from over 30 names on here. Now, granted, again, you can't trade every one of these, and you want us to have a smaller focus than this. But again, it's good just to have a watch list so that you can recognize when there's that repeat aggressive flow. So, a couple other names, UPS, a couple of the software names, the gaming names, Take-Two, EA, we've seen some repeat activity. Already mentioned Micron. Applied Materials is another one. Again, keep in mind with the semiconductors, they've got a lot more work to do to maintain that bounce. So I'm right now that's an underweight sector for me. But I think I don't think you want to ignore the sector. I think Micron could set up. That's the name that they've been gravitating towards. Also, Applied Materials in that space. So, and then Intel, what I mentioned as well with the charts, but. That one, and then material names. I didn't mention much of Nucor, but Nucor is a name that they have crushed this name in terms of option activity. Same thing with to a lesser extent STLD, but they're still long all their Nucor calls. They haven't really sold any of them. So this was a name. Again, you kind of look at this sideways chart, and you're probably like, not much. But it's gone up. When they started to buy those calls was right around $56. So it's gone up from 56 to 60 in a relatively quick time frame. So if you're holding your last piece of Nucor, just like I am, I would be looking for this break of this. You could actually draw a little bit of a trend line here, which drawing tools, and I just want a trend line. So maybe something like this, which it's now outside of, and I think that's what you want to be playing and move higher. Again, big call buying in this name. They haven't sold any of those calls, so all in January mostly for the most part. Just a couple other names, and then we'll end the video. Transports, we talked. UPS would be another name in that space. Financials, which I only really went over, Carey and MAC. There was a leap call buyer in FTC. Also, Goldman looks interesting in the short term. Wells Fargo, probably the best option activity of any bank. We've seen just a ton of activity in Wells Fargo. I would also add Citigroup to that list. Biotech names, I already went over Gilead, but GBT is another name that had some data out this weekend, I think was pretty positive. VRX and Teva, as well as there was a short-term call buyer in GSK for this week. But VRX and Teva, those two names have seen a lot of repeat activity. A couple of Bitcoin-related names, Overstock and Mara. We saw some call buying in both those names last week. And then kind of other names I would look at is Etsy. TBT, we talked about that, a call buyer in that one, basically looking for rates to go higher. WBA saw, I believe it was an April call buyer. IWD, which is the value ETF, also saw a call buyer. And really, if you kind of look at the, and again, I like to break these out by sectors because also the final thing that I'll say here, um, besides Comcast, which saw a lot of call buying as well, PVH saw a call buyer as well, but the options are really wide in PVH, just like UPS. So you kind of have to factor that in. But I would watch Comcast next week. And then the other thing why I think it's good to look at this per sector is because, certainly when we saw that sell off in the semiconductors and in tech, if you were overweight that group, it probably was a little bit painful for you. So you want to be cognizant of how many names that you have on in a particular sector because from time to time there will be these rotations in and out of these groups. And if your sector that you're overweight, that you're way overweight, gets rotated out of, you could have a pretty nasty P&L day or a nasty P&L week if you're a little bit over the tips of your skis with how many names that you are loaded up in a particular sector. So always good. Again, this is just a watch list. It's not my positions, but just you want to be cognizant of getting, Kramer plays that game on Mad Money. Am I diversified? You want to have that in the back of your mind if you are overweight something that you're okay with that risk. All right, so that's it for today's video, for the weekend video. I hope that gives you enough names to kind of look at for next week. Again, big week, quadruple witching, Fed meeting, which December Fed hike is already priced in. But you could get some nice whipsaw moves with quadruple witching. And of course, eyes on Bitcoin futures, which I don't think is going to be that much of a distraction from equities. I think it's going to get attention, but I think stick to the plan and you should do fine. All right, everybody, have a great weekend, and thanks for watching the video.